Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Shreve here with a breakdown of the action on Wednesday, October 18th, where we saw a lot of selling in small caps, in the NASDAQ, and elsewhere. It seemed pretty broad-based, Ken.
Pretty broad-based. That's a tongue twister. You're absolutely right, Ali. We had the 10-year Treasury yield up again. Oil prices headed towards $90 a barrel. So lots of uncertainty for the market to navigate here. Found three stocks to talk about. Let's talk Cadence Design Systems, CDNS. That is an IBD long-term leader that is showing relative strength in this market. Also, Axon Enterprise, AXON, in a buy zone. And finally, in the enterprise software group, Braze, BRZE.
All right, we'll take a look at those three stocks. But first, let's analyze the major indexes. The NASDAQ today down 1.6%. The S&P 500 down 1.3%. The Dow taking a 1% hit today. And the Russell 2000 down a whopping 2.1%. So taking a look at the NASDAQ here, Ken, it seemed like early on in the session, it was holding up pretty well, but a lot of bleeding as the day wore on, and it seemed like that coincided with a 10-year yield that just kept marching higher for the most part throughout the day, hitting more historic highs.
Yeah, pretty amazing as money flows out of the bond market here, and we've just been talking about this higher interest rate environment. Typically, not a good recipe for a bull market. Market tends not to like rising interest rates. So here we are at a bond market that is quite oversold, but it's been oversold for a while. Lots of reasons why rates are going up. One reason, some are saying the bond market is doing the Fed's work for it. People wondering if the Fed is going to raise rates again. Well, interest rates have just been, that 10-year yield has been on a tear. So maybe it's likely that the Fed won't raise rates again this year. That is still in question. But these rising bond yields are a big problem. BRZE was very, very bad again today, and the NASDAQ fell below Friday's low. Not a major technical breach, but it does raise the likelihood of a test of this 13,000 level. So we'll have to see.
Yes, we will. And continued resistance at this downward sloping trend line and the 50-day line. So we're keeping tabs on the overall market picture here. Also, we can take a look at the S&P levels. Came right up to its 50-day line in Tuesday's session, backing away, also undercutting that low from late last week. The Dow held up a little bit better, but still a 1% decline. Now back below its 200-day line, Ken, and small caps hit especially hard today after a day of outperformance yesterday, a day of underperformance today. So a lot of volatility in small caps, and the Russell here still close to the lower end of its trading range that goes back quite a ways.
Yeah, particularly bad day for financial stocks today. You had a Morgan Stanley sell-off. So when you see financial weakness, that tends to weigh on the Russell 2000. I want to just go back to the S&P 500 for a second here, and I mentioned that this undercut Friday's low. So now this is the index going to test this 200-day moving average. What's interesting is that you really did have a good shakeout in the S&P 500 when it came down initially to that 4,200 level. So it undercut the prior low, and we'll see. The NASDAQ could be poised for a test of 13,000, maybe a test of the 200-day line now for the S&P 500. But it was looks like another distribution day for the NASDAQ. We had higher volume, meaningful percentage decline. So some institutional selling, at least on the NASDAQ today. Volume on the NYSE looks to be a close call.
Mm-hmm. And we know that a lot of eyes are focused on Tesla and its earnings report out after the close. So we will be giving you our quick take on that towards the end of the show. You mentioned oil up today. So here's a look at XLE, now up 5 days in a row here, Ken, really snapping back after a recent tumble that it saw to kick off the month of October.
Yeah, I mean, it's easy to chase performance here. I don't know that that XLE is in a buy zone here. It's obviously up for many days in a row. Not that 2 weeks ago it was at 85, and now it's all the way up close to 92. So I'd be wary of chasing price performance like this. But oil prices are definitely getting a bid. I will say with that S&P 500, the 1.3% decline today. You had a lot of oil and gas stocks outperforming, with oil up 1.9% today. A lot of oil and gas stocks in the S&P 500, but it just shows you how weak the overall breadth was on the NYSE, because again, you have a lot of oil and gas stocks that outperformed in the S&P 500 today, but index still fell 1.3%. So there were a lot of decliners.
Yeah, some good context there. Let's also take a look at IGV. This tracks the software sector, down 1.5% today, but still looks pretty orderly right now, holding in a trading range, holding above its 50-day. So weathering the current storm perhaps a little bit better than some other groups out there. So keeping tabs on this sector for potential setups.
Yeah, Joe Fahmy, a popular guest on IBD Live, he was on yesterday and saying that this is an ETF that he's still watching. The fact that it's still holding above its 50-day moving average here is impressive. One of the stocks that we're going to look at, Cadence Design, is in the top 10 holdings of this ETF. But it is interesting to see names like Adobe, Palo Alto Networks, Intuit. A lot of these stocks are still holding up quite well in this market, and they're all in the top 10 holdings of IGV. So if this breaks, that probably is not going to be a good sign for the market, because the top 10 holdings are kind of a who's who of mega cap, software stocks. I mentioned Adobe, Intuit, Palo Alto, Synopsys, Cadence Design. So still fighting a good fight here, but we'll watch to see if support holds here.
Mm-hmm. Yeah. Let's also take a look at CDNS in the software sector. Somewhat similar action here on 10/6. That was the follow-through day on the NASDAQ. The stock had a nice gain of 3.9% in volume that day. And so holding up really well, I would say, after that big move, especially in the context of what we've seen with a lot of stocks lately. This one's holding up.
Yeah, and this is what you want to pay attention to as we wait for the market to bottom. We don't know when that's going to happen, but you just always want to pay attention to stocks that are showing relative strength. To me, this looks like a very orderly pullback to a prior buy area. So 247.50 is the pivot that we're looking at here, and you can see it closed about a point below. It's been a very orderly decline, still holding above the 21-day line here. And I don't think you have the 10-day moving average on this chart, but it's just as close, slightly below that. So really, looking good in this market. And again, it's a top 10 holding of IGV, and looks like a very orderly pullback, and stock that's doing well in this market.
Well, there you go, Ken. I added the 10-day line there in pink.
There it is.
Just for you.
Thank you.
Okay, next on the list.
That must be important.
Yeah, let's take a look at AXON. Got a jolt of buying on 10/6, 7, 8, or well, I guess not 8 because that was a weekend. But anyway, starting on 10/6 and the following couple of days, and it's holding in a breakout area. But Ken, is this one looking a little extended?
Well, I mean, it's in this blue shaded area, so that tells you it's still in the 5% buy zone from the 217.61 pivot. So technically, it's about 2 points above the buy point. So I'm going to say it's not quite gone yet. This is a stock that still looks good to me. Obviously, the company used to be known as Taser. The stun guns. Now they have Axon body cameras, and really have adapted and announcing a lot of new products here. So Axon, you can see the revenue growth continues to be very strong in recent quarters, and to me, still looks like it's in range here. But what we're seeing during this market pullback, it tends to go after a lot of stocks. So you don't want to get lulled into a false sense of security of buying a stock when you're kind of in an uptrend that's under some pressure, because this market eventually goes after everything. So going to watch this when the market turns. I think this has a chance to still be a leader. But again, just another stock, just like CDNS, that's showing relative strength here.
Yeah, definitely. And some really nice growth that it's been posting as of late, especially the last couple of quarters. Now let's take a look at a younger name, or maybe a less familiar one to the audience out there, and that is Braze, BRZE, in the enterprise software group, setting up in a flat base here. Ken, strong top line growth, not profitable yet, but that sales growth does look pretty decent.
Yeah, I think customer engagement is something that a lot of companies are focusing on these days, and this is right in Braze's sweet spot. This is their specialty. So, customer engagement software. Really an enterprise software stock that is holding its 50-day moving average, and I know you had the weekly chart up there first, but this is really a good example of what a flat base should look like as it holds support at the 10-week moving average. So this stock also, it's just on the verge of profitability, not profitable yet, showing pretty decent increases in fund ownership in recent quarters. So when you're a young company and you want to see that rising fund ownership, again, not profitable yet, but it does have that big revenue growth and good fund sponsorship. So I think it's a name that continues to look good amid a fair amount of selling in the enterprise software group. But there are a few stocks left standing here.
Great. All right. Well, we'll keep it on the watch list, Ken. Thank you so much for that. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope everyone joins us. We've got the breakdown on Tesla, which, speaking of, I almost pivoted away too quickly.
I know.
Yeah, the stock after hours up fractionally. I think it's as IBD news editor Ed Carson said, it's all going to come down to the call because I'm seeing the early headlines coming out that they missed earnings estimates. So we'll have to see what they say on the call and how that could impact the stock. And Ken, I know you know this, but your thoughts on what we see after hours and how that may or may not translate to the following session.
Well, I think there's a good bet that Tesla is going to trade pretty heavy volume in after hours trading. So to see the stock at 243.50, 243.75, you're probably going to get a pretty tight bid and ask in after hours trading. So for people that are interested in buying the stock or selling the stock, there's probably going to be enough liquidity here in after hours trading. But you want to be careful of stocks that trade really, really thin volume, either in pre-market or aftermarket trading. I wouldn't put Tesla in that boat. Tends to be pretty liquid during the day and in after hours when reporting earnings. So I'm not don't do much buying in pre-market or aftermarket myself, but if you're going to do it, make sure the bid and the ask is fairly tight and there's plenty of liquidity.
Right. And I mean, a lot of times you do see whatever the initial reaction is that ultimately is what pans out the following day. But there are some times where you'll see a stock down big after hours, and then the next regular session, they shake that off and recover. Maybe an analyst comes out and upgrades the stock, or investors continue to digest certain line items on the report. But as always, we will take things day by day and continue to monitor the reaction of Tesla earnings. And our team at investors.com is going to have a more detailed breakdown for you of the results and the stock action. And tomorrow morning on IBD Live, we will be doing the same, giving you our updated view on the stock and the broad market action. So make sure you check it out, investors.com/IBD Live for all that. We'll see you there, and we'll also see you right back here tomorrow at the close.